You are looking at a chart of gold, okay, 1 hour chart, and I don't really have a sense of direction on this at the moment. Right now, if I look at right now, what I want to do is do a scalp trade. I'm going to do a scalp trade. I'm looking at this fair value gap that we've come into on the 1 hour chart. We've also come into this order block, okay, the 1 hour order block. And so I'm going to take a long, that's what I'm looking at, a scalp long trade. I want to see if we can get back up and come into this fair value gap that's open. So I'm looking for a move up to 2390, okay? Just a scalp trade. Now, that is also in alignment with, let's see, the 4 hourly chart is what I want to look at. I thought I saw a gap here somewhere. Let me just turn off these lines. Maybe I was mistaken. I thought there was another price level that came into a gap. No, so maybe I just saw the 1 hour fair value gap. Okay, so I'm expecting a reaction from here, and I do think we'll take out these highs. This is 2386. So I want to see if we come back up to here. Okay, that's kind of what I'm looking at. As a scalp trade back up to this 2390 level, whatever that level is. Okay, and so that's just going to be a small scalp from there to there. All I'm looking for is 50, 60 pips. There's enough range to get that. After that, I think looking at yesterday's price action, let's talk about a couple of things here. If we look at yesterday's action, this was key, right? This was yesterday, Asia. And this was important as a level because we had price displacement down and a closure below. That was the down movement prior to these highs, okay? And once we've closed back below there, you can see that, let's see if it's clearer on a 1 hourly chart. Let's see. It's not really that clear on a 1 hourly chart, so I'll stick with 50, maybe 30 minute. Let's see. 30 minute may be a bit cleaner, okay? So we've had this yesterday in Asia. This moved down, followed by these 3 up candles, okay? So that is a very clear ICT signature for bearish setup. Now, those 3 up candles are your bearish order blocks, and with nice price displacement, we go down. Also closing below these 2 down candles, which are the 2 down candles prior to the move up. That is now the bearish breaker, okay? You can see all day yesterday, we were not able to go through that bearish breaker, okay? I was thinking that New York may wick into this rejection block, so I was kind of looking for the market to take out Asia highs before going down. London, especially when New York took out the lows of the day, but then we only got as high as the London highs, which is where I had some longs on that I took out. Okay, let me bring up the Twitter profile. So I had some longs yesterday. So this is the long that I took in New York. Okay, this is back up to the 2396, back up to the London highs. Okay, that level there, 2396, and then we basically went down again. It was coming into these bearish order blocks. This breaker, I didn't trade the short. I continued to scalp to the long. I really wasn't interested in shorts, but there was a definite clear short setup early on in the session, and you can see very clearly that we were not able to go above this. These. We just draw a line there. You can see that's the bearish breaker. We remained within the midpoint of that. Okay, and coming in to the fair value gaps here inside this bearish order block. So very clean setup. Okay, exact same setup when we had gold go down on Wednesday last week, I think it was. Okay, we had the big move down. You can see this exact setup that I spoke about on the hourly chart. Let's see if we can find that. Let's go to an hourly chart. So there it is there. Compare that. You've got up candles. Okay. Here's your bearish breaker, right? So you got up candles straight down. Maybe that wasn't the one. Was that the one? 2432? No, it was up here. Here we go. This is, so you got your 3 up candles. That's your bearish order block. You've got your down candle prior to the move up. Displacement down, back up. This was in London on that Wednesday, 18th of July, into the bearish breaker, right? Into the fair value gap, into these 3 up candles, which is the bearish order block. Again, I've spoken about that previously when I took the short. Okay, you can see London comes up again. We don't breach the midpoint of that bearish breaker. We're coming to the fair value gap of the bearish order block. That was London. This was New York. This is the trade that I took down, high probability. Of general that you can go and find it. I don't know where that is. Let's see. These were all the longs from the current setups we have. Those shorts were way further before these. There we go. There's those shorts that I've taken on that Wednesday. There's the pattern there, right? There it is there. Okay. And that was my target down to here. So you can go and look at the previous videos. There's videos on all these entries. Okay. About that setup. Okay. But coming back to where we are now, let's just go back up. Okay. We have that exact same setup, right? 3 up candles, displacement. There's a bearish breaker before the up candles. We have that now here. but on a shorter time frame, right? So these are signatures that repeat. Okay, so I think it was on the same time frame. Here we go. Okay, 30 minutes was what we were looking at. You just got to find them, right? And look for them. So there was the three up candle that created the bearish order block, the down candle prior to that move up. That is the bearish breaker. And you can see again, New York, that 9:30, that candle there, 9:30 to 10 a.m. Right, this candle finishes at 10 a.m. has made the high. Okay, if I take you back to where we were on that Wednesday, I'll show you this candle is the 10 a.m. candle. Okay, makes the high. So that 9:30 to 10 a.m. is key in terms of timing. Okay, so just back to the 30-minute. As I said, I didn't take this trade to the downside. Right, there's your order blocks, displacement, fair value gaps, bearish breaker. Those two down candles, and you can see throughout the entire day, we were just getting stopped out, and I was trading this long. Okay, I think I took the Asia long first, and then the New York long after low of the day was breached. Low of the day, high of the day. This would have been a great short, high of the day short, all the way down. This was just a pullback that I took along after taking the low of the day. Okay, back up to the high of London. New York will typically always give you an entry, take liquidity. So this manipulation move was what I traded to the upside. Okay, I did not trade down. And you can see we still haven't really moved down significantly at this point in time. So we now have fair value gaps. Okay, we have bearish breaker, right? Sorry, not bearish breaker, bearish order blocks. This here, this down candle is your bearish breaker. Okay, so any longs will be capped, right, in this range. Okay, so any movement up, I would expect to be capped up to this level. So I will take and will look for a long, small scalp trade up to this level. Okay, and then I may take a short depending on where we are at that 9:30, 10 a.m. Okay, not sure exactly what my targets would be. Maybe back down into this rejection block, possibly. Okay, if I do take something, change the color of this. Actually, I'll change this to this color. Okay, so to me that'll be a nice target. If I get a movement back up to here, even just down to here, this low is fine, right? I'm only looking for 50, 60, 70, 80 pips. I don't have to take the entire 190 pips there. That's something that is visible, right? This low, this low. So I'll monitor this, okay, and see if we can get a nice. It's not far away from where we are now, okay, but it's only 75 pips away. And so we might do what we did yesterday, come into a key level, and then for the rest of the day, just build, orders to go down. So let's monitor this, okay. For me, that's what I see on gold. I see that this bearish breaker and these two up candles, the bearish order block and this fair value gap, will hold price, okay. Whether we go down today, which is Tuesday, or tomorrow is yet to be seen. We may go down today, tomorrow come back up. It's a very volatile market. This week's very busy on the economic calendar. Okay, so today we have news at 10 a.m. So if I was going to be looking for entries, I'll be looking at that 10 a.m. Okay, all depends where we are. I mean, 10 a.m. by 10 a.m. we may be down here and have taken out these lows. Let's actually put a line there. Okay, so I think that's the draw on liquidity. So before 10 a.m. we might be down here. In that case, we might be looking for long. So it all really depends how the day evolves. Okay, but I'm expecting price to be capped at this level here in that 2390 mark, right? As I've explained. That doesn't mean I'm going to be taking shorts. I may. It all depends what I see in the charts. But I think that will be the high today. Now we may wick a little bit through there. Okay, but I think that is the level that we should be looking at. So monitor the charts. Okay, review what I've shown you on this video. Go back to that Wednesday. I think it was Wednesday and Thursday. So Wednesday 17th of July, Thursday 18th of July. They were the 2 days where the shorts were on. Okay, I typically look for reversals on a Wednesday or a Friday. Right, Wednesday is the middle of the week. So this is why, even though this was good level, the market didn't really move yesterday. Even today we might not move much. We may take out these lows and just chop around. Typically Wednesdays and Fridays are the key days. It also depends on the news calendar. Hope the video was useful. I will now talk with you in a future video.